Peace and love, and welcome back to the channel. Today, I wanted to do something different. I decided to make this video. One of the questions that I'm always asked about is entries and exits. But more than anything, I'm asked about the entries. When do I get into a trade? When do I get into the trade? So I've found a simple way where I'm able to determine uh, direction based off of looking at the candlesticks. Using a very simple, I run this play every day before I make. And matter of fact, it's a part of my trading plan. I do not enter trades unless I see what I'm about to show you all. Um, but there's other determining factors that go along with that as well. And but let's get to it. Let's look at, and I'm going to use SPY because it's volatile, it's liquid, and it's always going to be volume on SPY, and it runs crazy. So if you don't watch it and don't pay attention to certain things, it can get away from you. So hopefully this video will be able to help you. Now, the first thing I want to go over real quick is time frames, right? Uh, when you're looking for something to when you're doing your technical analysis to determine whether or not you want to trade that company, you should start with a higher time frame so that you can get more of a macro perspective of what's going on. Um, and then you go from there to a smaller time frame to make your entries. Now, uh, I use the 15-minute chart in order to make my entries. Now, some people like to use the 5-minute chart. Some people like to use the 2-minute chart. Some people like to use the 1-minute chart. Um, I don't, because I like to kind of slow it down as much as I possibly can. And with trading, you want to be you have to be things have to be right and exact for the most part, because your entry could be, that's where you get your money at. You get your money off of your entries. So you want to try to give yourself as much of an edge as you possibly can uh, with looking at a few little things, simple things to make your entries uh, better. So here's my chart. I use the red, the black, and the green. So for the sake of this video, I'm going to share with you that the red is pre-market, the black is the day, the session, and the green is the aftermarket. Okay, so the first thing I want you to do is to pay attention to what's going on in pre-market, right? It is very critical, especially the last 30 minutes of the market. You should be having a general idea of which direction you're going in, headed into the market, based off of does what's happening in pre-market match your bias? If you already have a particular bias, if you're saying that the market is bullish today, um, if you're saying the market is bullish today, and you should be able to confirm that based off of what you're seeing in pre-market. And I'm going to share today, if you watch my pre-market videos, these last 2 days, I was wrong. My bias was wrong, right? Yesterday, I said, after we got this gap up, right, I said that the market would be bullish. I was bullish on the market. I figured that we would come out and we would take out and create some higher, some higher highs based off of the gap up, the movement that we got in pre-market, right? Now, as we can see, when the market opened, we plunged. The market plunged, right? I was wrong, right? Um, in my analysis in pre-market, I was wrong. Today, this is June 7th, pre-market. I did my video at 7:14, 7:45. I said 7:14, 7:45. I was right up in here. I seen this pre-market action and whatnot. Market dropped, Target dropped, all these different companies, retail, all this stuff was just dropping. And my bias was that the market was bearish, right? However, we could see when the market opened, surge, came out, rip, consolidate, drop, rip, pop. Okay. Now, I did not enter, though on yesterday I was bullish on the market. I did not enter calls. Though I came into the market in pre-market today, I was saying that the market was bearish. I did not enter puts. Why? Because looking at what was going on, when I looked at 8 o'clock, started looking at pre-market at 8 o'clock because, number one, I understand what the support and resistance levels are. And what is support? Support is the floor, right, of your house. It supports you as you walk around your house. Resistance is the ceiling in your house. It resists, like the ceiling resists the sun from coming in or rain or whatever. You get what I'm trying to say. So I know my support and resistance level. And the reason why I was bearish this morning is because I know that right here at 406.93 is a major support for this stock. It has bounced off of this level several times, right? So I know that this is where my support is, right? So when I saw that the market came in, and then at 8:15, 15 minutes, I'm using Chicago time, 15 minutes before the market opened, finally I seen a green candle creating a higher high, meaning this high was higher than this one, and a higher low, meaning this low was higher than this one for the first time, right? So then I watched it. The market opened right here at what did it open? 408.10, right? It pulled back. It did not take out this low. It did not take out this low, right? It pulled to a low of 407.63. And then it began to surge. Slowly, it didn't rip right out the gate. So I was looking for it to see right off this first candle if I could get a wide range bar and take out this high, right? It did that. Now, let's just stop for a second. And let me show you exactly. I want to take the rest of the candles off so that we could just look at it candle by candle. Well, that doesn't look right. Well, let's go back. So looking at this first candle alone, let's forget everything that's to the right. Let's look at this one candle and see what has going on. What is the market telling you? Mind you, I know where my support is. We have a wide-ranging bar, right, with a wick at the bottom, what I call a bottoming tail, right? This means that from 8 o'clock, to this first candle at 8:30, buyers have stepped in, right? Buyers have stepped in. I did not enter on the first candle. Did not enter at the first candle. Now let's look at, but this first candle right here, typically, for the most part, will give you a general idea of which way price is getting ready to go. Okay, and I'm going to prove that to you. I'm going to show you that time and time again. Now, because I'm right here at my support, and here the second candle comes, it opens, dips a little bit, runs up, pulls back. This is showing me resistance. This is showing me that price, that there is some resistance up in here in this level. Now, here's a thing, right? We have a gap that's been created, and if we use the old adage that all gaps must be filled, it has to go up here. It looks like it's going right initially. It looked like, at bare minimum, it looks like it's going up here to at least close the gap, and then maybe it may do whatever, right? So then this candle goes up, touches right here on the other candle. Closes the gap, fills the gap, pulls back. I still did not enter. Next candle, open, push up a little higher, still creates a little. It's a little higher than this one, and then it pulls back. Now, at this point, we have two higher highs. What these first three candles are, this is a higher high, and this is a higher high, and we got a higher low, but this one takes out this low. Now, when this candle gets ready to, so it's telling me that it's trying to go up here, but at the beginning, especially at the beginning of the market, you have to be patient and let the market settle. Let it settle. Now, at this point, all I know is that I got a major support behind me. All I know is that I'm creating higher highs, and it's telling me that the market is trying to go higher, right? And then this pushback, this flush, boom. I enter on this candle. It had went up here. It retraced again, back down here. Somewhere in this general area, I entered. Why? Based off of what happened right here on this first candle. This first candle is a very good indicator of what kind of day the market may be. Is it 100%? No. But way more times than not, this will give you a very good idea, a very good indicator. It's a very good indicator as to what price is trying to do for that particular day. Okay. So, having said that, I got my pullback. I got my higher highs. I enter the trade right here around 9:20. I enter this trade and we move. Based off of what's going on right here. Now, let me show you how that works on other days as well. Here it is yesterday, Monday. A lot of consolidation and whatnot. Market opens right here. Price moves up, price comes down, closes a little bit below where it opened. Now, let's just look at the candle. That's not what is this candle telling us? What is this candle saying? This candle alone, the first 15-minute candle on the chart, what is it telling us? It's telling us that it's not giving us a clear-cut direction, right? Because we have a big wick, a big bottom and tail, a big top and tail going on with the candle. It's basically, and who cares what color it is? That's another video I'll be talking about the colors of these candles and stuff like that. That's a neutral candle. It really hasn't went anywhere. It's really not giving us any indication that the market is that is going to be bearish or that is going to be bullish. But now check this out. The very next candle is a big bottom and tail, right? Meaning, in other words, it's a lower low. It's a lower low, but they push price up. Got a nice wick bottom and tail on it, and we close right here. This is still a lower high, right? Next candle. Surge, creates a high, drops a little bit, consolidates. Now we begin to plunge, right? Price picks up a little bit more, it plunges again. Now, isn't this kind of all over the place? It's not really a solid trend. It's not really a solid uptrend. It's more downtrend. It did plunge quite a bit from, 416 to a low of 410. That's about, I don't know, it was about $5.50 worth of price. What is that? Yeah, about $5.50 to the downside. But the way that it ran on this particular day is similar to what this candle here is showing you. So be mindful of that. Pay attention to what this first candle is indicating. This here indicates that it really doesn't have a direction, is what I'm truly saying, right? It's one of those days. Sometimes I look at these candles and I say, okay, well, yeah, I don't think I want to trade this today, right? And I'm knowing that here's, again, back to what I said a minute ago about support and resistance. Now, the support levels is this, all of these, these three alerts and whatnot. This is the support, the resistance levels, right? So I'm knowing resistance is right here, right? And I see this type of a candle right here. It's not a wide ranging bar. It's not something that's showing me that buyers are really stepping in and trying to push price, through. Because when you got a lot of resistance up there, you're going to need a powerful candle to come through and push a wide-ranging bar to come through and push price through this resistance. So I knew what my resistance was. And when I saw this type of candle right here, I said, yeah, well, no, I'm not playing that to the upside. Because why? Because it's not giving me any indication right here on this first candle that it is getting ready to do what I needed to do. Because if you're right here, just below this resistance level, I don't need this candle to come messing around. I don't need this, I don't need to have a big wick at the top and a big wick at the bottom and, not really telling me what direction is going. I need this thing to come out and surge if I'm right near a resistance. So that's key too, knowing where you are in the play, knowing where price is. Are you by a resistance, right? Are you by support? See, because this was an easier play because, hey, I was right here by the support. So at worst, even if I did get in this thing, let's just say with this red candle, this third red 15-minute candle, let's just say if it does begin to drop, I'm right here at my support, right? So let's just say my little philosophy didn't work in this instance, right? Let's just say if it did come back the other way, well, I'm right here at support. I got my stop loss here. I got a tight stop loss after I enter, because why? If it goes against me, I know I got a support right here. If I do stop out and it hits this support level and bounces, I can get back in. That's what the hell just happened. I don't know what I just did, but anyway, that's how you manage your risk as well. People ask me that question all the time. When do I use a stop loss? How do I use a stop loss? Well, I mean, it's kind of hard for me to tell you how to manage your money. You know, it's kind of hard for me to tell you. I don't know your risk level. I don't know your pocket size. But I'm telling you that upon entry, especially when you're at a major support level, right? Especially when you're at a major reason. Just say if I did get in this, if I did grab calls, right? If I did grab calls, then I should be putting my stop loss. Just say if I did enter right after this candle here. Let's say if I did that, right? I should put my stop loss right at break even or a little lower, maybe 10%, because if it does not break through here and it bounces back, and it does this, I'm out of the play. It didn't do what we thought it would do. Okay. Now let me get back to let me get back to what I am saying. Same thing. This is Friday. Market opens. It opens at 412.36. Right? It drops slightly. It drops. No, it runs up, actually. Surges up, and it pulls back. Not only does it pull back to where it opened, but it goes a little lower. It goes lower and pops back, closes. Candle closes right here. Now, what do we have here? We have a big wick or a topping tail. We have a topping tail right here, right? And now look what happened in pre-market here. Same thing. Got a topping tail and down, down, down. From there, from this topping tail right here, it just confirms what I'm saying. From this topping tail here, look what we got. Lower high, lower high, lower high. All in pre-market. Nothing but lower highs. Right? Lower low, lower low, lower low. It gave you what it was. It gave you the move in pre-market. Now, this was a kind of a sideways day, but it was still an opportunity to make money. And that leads me to another point that not only knowing your support and resistance lines, also FOMO, fear of missing out. You know, don't get afraid of that. Now listen, you see this big wick right here, a nice pullback. Then boom, we pop up. We create another lower low. We pop up a little bit, create a higher high, a higher low, but then another one of those weird candles that really didn't go anywhere. This candle really hasn't went anywhere by the time it closed. And then now it does what it did in pre-market. It does the same move. Okay. Get out on this green candle or somewhere down here. It was a kind of a choppy day on Friday. Actually, it was a very choppy day on Friday. But again, basically paying attention to what price is doing on these candles. This first candle. Come on, let's look at another one. This is Thursday. Watching the market, watching it, all these lower lows and lower highs come down. Now, look at where it is again. Where is it now? It's right back at my resistance. Let me put for the sake of this video, I'm gonna put this alert just to show you all where my major support is. But so it's doing all this, it's tumbling, it's falling. And then here's the first candle. It opens, pops a little bit, comes down, big retrace, big wick, big bottoming tail, big one, right? Opens on the next candle, goes up a little bit, comes down again, pushes up again, big bottoming tail. Boom. Now, it moves up, price moves up, creates newer highs. Now, it did not take out the pre-market highs. And again, like I said, when you have these highs that need to be taken out, I like to see them happen early in session, because that's where the volume is and whatnot. Now, I must admit, I got caught in this because when this big red candle came here, I got out. Now, I entered right up in here. Because once I seen that it didn't break my support, I entered this trade right up in here. Boom, we got a pop. And then we got a big, huge red candle right here. I got stopped out, right? It retraced and ripped. Now, I did once I seen it take out this low right here, I was like, damn, it's gonna break the support. It's gonna break the support. It didn't. Not only did it not break the support, but it did not take out the previous day's low. Once this candle here, this was all the confirmation I needed. I got in right here at the bottom of this candle, the first 5 minutes of this candle upon this retrace. Now, I told you I got in right here, ran it up. It pulled back drastically on me. I stopped out, but I stuck with it. And got right back in here right here. Now, what's the difference between getting in right here? What's that? 408 to getting in right here. Still 408. It's still 408. I didn't miss anything. Why? Because I stuck with what I saw. I knew where I was. I'm right here at the support. So I got back in and we ripped. And then we finally took out the pre-market highs, and we took out these highs over here, this level right here. Okay. So by sticking with my little cheat code or whatever, I was able to fight with this play and hang in there and make some money. And we ripped. I would have been highly upset, excuse me, had I not gotten back, had I not stuck with my plan, right, and stayed in the play and got back into play. Okay. Man, that had me so upset Friday that I this big red candle, man. But I didn't get so emotionally engulfed with what I saw, and just waved the white flag and give up. I stuck with it, and I stuck with my analysis. Same thing. Let's go to Wednesday last week. I'm just showing you all the pattern of how what I'm saying has been working for me, right? Came in pre-market, run up, run up, run up, run up. Looking pretty good, right? All right, let me check out the first candle. Let me see what I got. First candle, open, pop. Wait, let me go a little. Now, you see that? Now look to the right. Did that take out those highs? Nope, it didn't, right? Didn't take out those highs. Listen. When you're that close, especially at the open, when you're that close to a high and you don't take it out, you're going down, buddy. I don't give a damn. I don't care what stock it is. I don't care if you think it's going to the moon. Yeah, Tesla to the moon. Whatever you trade and you think like it's about to just run crazy and whatnot. I don't care if it don't take out, because again, back to a part of my trading plan is when I'm close to a level of resistance, if I don't get enough volume for price to break through that resistance, you're in trouble, buddy. You're going to the downside. Now, just look at the candle. Big top and tail, right? See that? Big drop. We're talking from a high of 416 to a low of 409 within an hour and 15 minutes of the session. That's good money. Just by paying attention to these, to what's going on the very first candle on the, paying attention to the very first candle on the 15-minute chart. Okay. Now, let's look at another day. 31st. Now, here's the first candle, right? SPY opened up on the 31st, which was what, last Tuesday? It just opened up. Now, we got a pop in the first half hour. We got a pop on the 8 o'clock candle. We got a nice little surge, created a new high, knocked out the previous highs and whatnot. Then there came this candle. This candle is weak. This candle has no direction, right? Market opens. Plunge. Now, well, you just told us to look for a topping tail or a bottoming tail. You just told that's what the video is about entering off of using the topping tails and the bottoming tails, right? That's not much of a topping tail, is it? Nope, it really isn't. However, as soon as pre-market opened, it kind of gave you an idea that it wanted to go down, right? Here's a big top and tail, right? Price just dropped, got a little pop, then it gave us a weak candle, and then it did drop. But again, it didn't follow my rule. I just showed you, what is that, like 5 days in a row, I've showed you where that worked, right? Well, you just don't trade. Some days it's okay to just close the laptop. Hey, man, listen, I don't know where it's going, right? And it really didn't, it just kind of was all over the place this day anyway. But sometimes you have to be disciplined enough to say, you know what? Hey, I don't know where the hell this thing is going, and I'm not going to trade it, because cash is a position as well. I used to didn't believe that. I used to think like, you know, you had trade, blah, 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 blah. But the market has a way of getting your attention and letting you know that your way ain't the right way. Some days you have to close your laptop and go live a little, go, you know, sit down at a cafe, you know, and, you know, read a little bit or whatever you like to do in your leisure time, right? Now, that's one day out of 5 that didn't work. Here's another one. It didn't give you no indication that this would happen, that we would get a surge like this on this Friday. On this particular Friday. Look what happened in pre-market. On the 7:30 candle, look what happened. You got a big wick right here. Here's your bottom and tail right here. Okay. So and about the fear of missing out part. Now check this out. I must admit, I didn't enter right here. This got away from me. I must admit, it got away from me. However, the market always gives you an opportunity to get back in. Now, so let's just say if I would have entered right here at 407, right? There was another opportunity at 410. Price ran to 415. So I missed about $3 worth of price action. Let's just say if I did enter up in here though, I did do that. But by me missing this move, I ain't do nothing but sit on my hands and wait for another opportunity to enter. And actually, I entered around here on this little candle here because I remember being upset that it pulled back and I thought it was going to reverse on me because it didn't take out this high. But it ended up working out for me. But anyway, fear of missing out. You know, the market always give you another opportunity to get in. Like with this one, right? Now, let's just say you did not get in up here or you didn't get in around here or whatever. Here's another opportunity to get in, right? And then when it reverses, there's a time to smack it the other way as well. You know, I showed you already with this one that I actually did get back in. So, you know, controlling your FOMO is another thing that you're going to have to, there's a skill set that you're going to have to develop in your own time. And good luck with that, man, because I still struggle with it sometimes, you know, just being real. So same thing here. Knowing where you are in the market helps as well, because you're not going to always get that top and tail or bottom and tail for an entry, but knowing where your support and your resistances are, knowing where you are in the market, you know, pay attention to your support and resistance levels and whatnot. But that's all. I just wanted to share that with you all, to get you all some type of idea of how I trade, or to help you all with your entries. If you have any questions or concerns, you can reach out to me. You can follow me on Facebook. My name is Ronnie Man, just like how it is there. You can find my page on Facebook. You can find me on Instagram at Ronnie_Man_Supreme. You can follow me on TikTok at Ronnie Man Supreme. I actually teach people technical analysis. I do it one-on-one, where people could come in and we can do we can go over the charts together, and I can show you exactly and back test what I teach as well. So appreciate all the love and support. I'm going to end this video now. Peace and love.